Have you ever felt like trading strategies are overly complicated, full of indicators, multiple time frames, and endless conflicting signals? What if I told you that there's a way to simplify your trading to one chart, one clean system, and one clear plan of action every day? Today, I'm going to walk you through a plug-and-play strategy using the First Light Beacon, a strategy designed to cut through confusion and help you finally trade with real confidence. The First Light Beacon isn't just another indicator. It's a system built from the ground up to simplify professional level trading, giving you mechanical entries, exits, and guidance without needing 1,000 moving parts. You'll know exactly where you are in the market, what the highest probability move is, and how to act with discipline and precision. Most traders get stuck trying to combine a dozen different concepts: higher time frame bias, lower time frame setups, indicators that constantly contradict each other. It's overwhelming, it's confusing, and it's why so many stay stuck spinning their wheels. The reality is, simplicity wins. When you trade clear setups at clear times with clear confirmations, trading becomes stress-free. So we're going to get into a workable strategy here in a minute, but I want to point out a few things. Most traders lose because they second guess, hesitate, and overcomplicate. The First Light Beacon was literally designed to eliminate those problems, turning trading into a repeatable system instead of random guesswork. It gives you the chance to identify levels, watch for confirmations, enter with clear rules that are visually on the screen, exit smart, rinse and repeat. This is how consistency is built. You don't need to sit at your screen all day anymore. With this system, you focus during key windows when liquidity is there, moves happen, and opportunities are highest. You'll learn exactly when and where to strike and when to stay out. So let's go over one of the popular strategies used with the First Light Beacon. First of all, this yellow is a 45-minute candle turned into a support and resistance zone. This red, right here, this red is a 30-minute candle turned into a support and resistance zone. This is the start of a new one right here. This is the start of another new one right here. We have alerts for this, so you don't have to sit and watch. All you got to do is wait for this red one to break out of the yellow. You'll get an alert. You come to your computer or you look at your phone and you wait for the new zone, this end cap right here, to form. So it'll look like this. Now you have one or two things that you can do. You can come over here and you can put a limit order on the zone and your stop goes there. Target 2 to 1 or 3 to 1 or whatever you want to do. Maybe you got a high over here you want to target to, like this right here. And you let the trade run. And there's your wick, there's your entry, and then there's your take profit right there. Or you can wait until price hits it and your beacon line, which is this average kind of line right here, it's a little different, but it's ours, turns green. Then you can take the entry if you're going to take market orders. You can size these zones to whatever time frame you want. The best entries are when the beacon line, turn this candles off right here, it does this, comes down, respects the middle, and pushes up out of the zone. But if you look right here, the red broke out of here, so you would have got an alert, and then you would have come and looked at your computer, and then you could see this happening right here. All the times when I take these entries, I don't even have candles turned on, and I'll see this turn green and leave the zone right there, closed out of the zone. So I buy, my stop loss would go to the bottom, and then I would target something to target. This next zone up here would probably be good, or 2 to 1, or however you would do it. And then there he goes, price right there. And it's waving around, but there it goes. So it just took profit. And that is honestly how simple this is. Your zones are your entries, the bottoms are your stop losses, and then you can use risk to reward or you can target the next zone above you.